Hey everyone, I'm Toni Taylor, Senior Loan Originator with Interconnect Mortgage in Palm Beach Gardens, Florida. And today we're going to clear up one of the most misunderstood topics in the entire home buying process, the difference between pre-qualified and pre-approved. And I want to be straight with you right from the start. These two terms get used interchangeably all the time by buyers, by real estate agents, even sometimes by lenders who should know better. And that confusion has cost real buyers homes right here in South Florida. So today we're going to fix that. By the end of this video, you're going to know exactly what each one means, which one you actually need, and how to get there fast. Let's start with pre-qualification. Pre-qualification is essentially a conversation. You call a lender or you fill out a quick online form. You tell them some basic information about yourself, your income, your debts, your assets, a rough idea of what your credit score is. And based on what you've told them, the lender gives you a general estimate of what you might be able to borrow. Now notice what's happening here. You're telling the lender nothing is being verified. No documents reviewed, no credit report is being pulled. It takes about 5 minutes, and honestly, that's about what it's worth in a competitive market because the sellers know the difference. Their agents know the difference. And a pre-qualification letter is not going to make your offer stand out from the crowd. Now, let's talk pre-approval. Pre-approval is a completely different process. With a pre-approval, you're actually applying for the mortgage, and that means your credit gets pulled from all three bureaus. Your income is verified and real documents. Your assets are reviewed and confirmed, your employment is verified, and an underwriter, a real human being whose entire job is to analyze your financial picture, reviews everything and makes a decision. At the end of the process, if everything checks out, you receive a pre-approval letter. That letter tells the sellers and their agent that a real lender has looked at your real financials and determined that you are a qualified buyer up to a specific loan amount. That is power at the negotiating table. And in South Florida right now, sellers are not waiting around for buyers who think that they can qualify. They want proof. Pre-approval is that proof. Now, I know what some of you are already thinking. Doesn't a hard credit pull hurt my credit score? Yes, a pre-approval does involve a hard inquiry, and yes, it can temporarily affect your credit score by a few points. But here's what I need you to understand. We're talking about a few points, not 20, not 50, a few. And that impact fades quickly, typically within a few months. More importantly, if you're shopping around and getting pre-approved by multiple lenders, FICO treats all mortgage inquiries made within a 45-day window as a single inquiry. So rate shopping does not stack up against your score the way people fear it does. The cost of not being pre-approved in this market is much higher than a temporary dip of a few points. Now, let's talk about how long pre-approval actually lasts. Most pre-approval letters are valid for 60 to 90 days. After that, they expire. Your financial picture can change, and lenders need to make sure that the information is still current. So here's what that means practically for you. Don't get pre-approved 6 months before you're ready to buy. Get pre-approved when you're ready to actually start making offers. If your pre-approval expires before you find a home, no big deal. We simply update your documents and reissue the letter. It is not starting over, it's just a refresh. Now, here is something I want every single buyer watching this to hear, because I have seen deals fall apart right before the finish line, and it is heartbreaking every time. Your pre-approval is based on your financial snapshot at that specific point in time. Between pre-approval and closing, your situation needs to stay stable. So here is my list of things not to do. Do not open new credit cards or take out new loans. Do not make large purchases. No cars, no furniture, no appliances. I know you want to start shopping for the new house, but you have to wait until after closing. Do not change jobs. Do not go from a W-2 employee to self-employed. Do not make large unexplained deposits into your bank accounts. And don't close existing credit card accounts. Do not co-sign on anybody else's loan. I always tell my clients between pre-approval and closing, pretend your financial life is in a glass box. Everyone can see everything. You have to act accordingly. Now, what about self-employed buyers? I hear this concern all the time. I'm self-employed, so pre-approval is going to be harder for me with the traditional banks. Sometimes yes, but Interconnect Mortgage specializes in exactly the situation. We have bank statement loan programs and non-QM products specifically designed for business owners, freelancers, and investors whose income doesn't show up neatly on a W-2. If you've been told you can't get pre-approved because you're self-employed, please talk to us before you accept that as a final word. It's almost never is. Okay, let me walk you through what happens after the pre-approval so you know exactly what to expect from start to finish. Step 1. You start house hunting with confidence. Your real estate agent knows exactly what price range you're working in and can show you homes that fit. Step 2. Make an offer. Your pre-approval letter goes with the offer. It tells the seller that you're serious and you're qualified. Step 3. You go under contract. Once the seller accepts your offer, the loan process officially begins. We order the appraisal, we begin underwriting, and work towards closing. Step 4. Final approving and closing disclosure. Once underwriting is complete and the appraisal comes in, you'll receive your final loan approval and a closing disclosure that outlines all of your numbers. Step 5. You close and you get the keys to your home. You sign your closing documents, funds are wired, and you are officially a homeowner. So let me give you my bottom line today. Pre-qualification is a conversation. Pre-approval is a commitment. In today's Florida market, you need the commitment. You need a letter that tells sellers you're ready, you're qualified, and you mean business. And getting there is not nearly as complicated as most people think. With our team, it typically takes 24 to 48 hours. Now, before you go, I put together a completely free Florida mortgage pre-approval checklist that shows you every single document you need to gather before applying. It's organized by category so nothing gets missed. W-2 employees, self-employed borrowers, veterans, it covers everyone. The link is in the description below. Download it, start checking things off, and when you're ready, book a consultation for free. No obligation, no pressure, just real answers about where you stand and what your next move should be. I'm Toni Taylor with Interconnect Mortgage in Palm Beach Gardens, Florida. If this video helped you, please hit the like button and subscribe. And for more real talk about mortgages in Florida, I'll see you in the next one.